look at this whole SPAC nonsense, right? For a company that does really good with data analysis and figuring things out, how could they not have figured out that most of these SPACs are cash flow negative and they would be burnt out by within a year or two?
What do you mean by
right?
most of these SPACs?
Most of the SPACs that they invested in, look at the prices on them right
Yeah,
now.
but that's just the macro. That's not their
No. That's not just the macro. That's not just the macro. Because if
that's
you
not
look,
the macro. All these companies are down because Wall Street hates SPACs right now. They hate growth companies. You're telling me Wejo is a horrible company?
not all of them, but majority of them, I would be surprised to see that them lasting another year or two. Mainly because you look at their cash.
Their financials. That's what I think he's saying is financially they're not stable enough without going back and getting more money.
Exactly. Right now, they're in a position where most of them are burning through their cash, right? Yeah. Which means that their pipe is going to be done by the end of the year. Unless they go into the debt markets, they're done. They're going to be gone, right? And that's a huge.
I disagree. I don't know why you're saying that. Like, are you saying all the SPACs are just burning? Like,
I'm not saying absolutes of all. I'm saying some. For me, very a decent amount. But
a decent amount of the 19 SPACs are going to go out of business in 2 years. That's what you guys are saying.
That's what I'm saying. Not these guys. I'm saying 70% of them are gone. I say 70% are gone.
It was a calculated bet that they're still going to make money on this overall. It's like picking your own portfolio, right? At the end of the day, in 10 years, your top 2 or 3 positions are what carry your portfolio. I believe Wejo is one of those companies that will be one of those top 3. I also believe that, yes, this is the reason. If you look at the financials and earnings, this is why the operating margins went down and everything looked down, because they've had to claim those losses on sales for the SPACs for the last 2 quarters. And there's actually still another $126 million they have to claim. I believe they're going to claim all of that next quarter because they said their operating margins were going to be at the lowest it's ever been, 20%. If they're smart, they would just get through that, get through the red. And then after that, they will be profitable. But they also got customers that, if they can stay alive, will continue to build and continue to pay them. So I think it'll be a net wash 5 years from now. I mean, right now it looks bad, but I think with Wejo and some of the other companies, they only needed like 2 or 3 of those to really thrive. Like, I think Sarcos Robotics could be something very interesting in the future.
So we are at this point going to have to use a death watch and see how many of these die.
Hey, that'd be fun.
Yeah.
We've got that.
Let me share the screen right now showing the SPACs. Because when you guys are saying they're going to die, I'm just like, hold on. Like, are y'all sure? This is dailypalantir.com.
Cash. They'll have to get more cash. So, okay, out of these, who are you?
So Tritium's going to be here. Yeah. So for me, Tritium will be here. Wejo will be here.
Yeah.
Babylon will be here. Appearance, I don't know if they had some decent earnings. They will definitely be here in the digital advertising space. Sarcos will be here. Those are my 5. The rest of these guys, I mean, Energy Vault, I think will be. Bird, I don't think it's fucking going to be here. Bird's going to fly away. Bird's not going to be here.
I definitely think Rigetti will be here. That's the quantum computing company.
Okay, so we got 6. Chris, do you disagree with any of my 5?
No.
Okay, so we got Rigetti. Well, we'll trust Dom. Energy Vault, I mean, that's a bet, but like, if they, I want to put Energy Vault. Lilium is, I think they're gonna get fucking sued out of existence if they can't get the plane to fly. So we don't know about them.
What happened with Embark? I think their stock price like crashed, if I remember right. But their CEO is sharp as a whip.
Faraday is.
Faraday would be the one that I think definitely is going down. Like Faraday's like.
So here's a quote from the world. Wolf of Wall Street. Here's a quote from Wolf of Wall Street. Don't judge me by my winners. Judge me by my losers, because I have so few. Right. So I would say I'm judging the SPAC decisions based on companies like Faraday. Right. What did Palantir see in Faraday to say, hey?
I mean, I get what you're saying. Is like, why even like what did they see that was so?
Right.
But you can't pick them all. You can't pick them all winners. They only needed a couple of these to take off,
Wait, Arny, can you explain a little bit about Faraday? Do you know anything about them?
No. Well, apart from knowing what they do, I'm kind of out. I'd just like to say that this SPAC saga was very weird at the beginning, especially since I worked when I was an analyst. I had to analyze many SPACs. There was the SPAC spread in the Italian market as there was the other year in the US market. I would say that 99% of the SPACs are not good investments. Are great
He's like,
tools.
shit. They're shit.
Not because all the companies are shit, but the way a SPAC starts already sets you the mood. And what I mean is that SPACs are great for the promoters. If they are great for the promoters and maybe for the company receiving the money at a huge valuation, it means that they are not good for investors. At least what we are getting here is that we're not only investing money, but we receive some payments. We're understanding company industries where they are not in yet. And for a company like Palantir, if you think of it, how important it is to map possibly every sector. And I think what they wanted to show is not much about the potential gain they could have by investing in these companies, but also to give a signal to companies maybe thinking of, maybe we can use a Palantir Foundry for our operations. If Palantir can show that regardless of the industry, regardless of the sector, wherever you are, regardless of the size, you can benefit from Palantir. For sure, in terms of a financial decision, it is a disaster. I thought it would have been a disaster since I seriously had to analyze once in detail, after all the SPAC acquisition was done, how dilution there would be, and it was crazy number. I don't remember the precise number, but at the end of all the deal, the investors would have a very tiny percentage of a company they paid a very high price. This is in general how the SPAC works. But since they called it like strategic investment, I want to think there was more than that. For sure, we don't fully understand it. We just see the financial hit, which was kind of predictable. I think their go-to-market strategy is weird, but I think they need to show that Palantir could be used for any case, for any size. So it's like when AWS started, they needed to show, okay, you want to build a startup, go and start with our cloud. It could benefit you. So weird move, probably doesn't work well in terms of financial results. I think there is much more than we see. And I would hope to see them doing something strategical again. Now the market is depressed, because if you did it when the market was up, why don't you use the cash you have now to do something similar? I saw Snowflake has Snowflake Ventures, so that would be very beneficial in my opinion.
Yeah, same thing with Salesforce. Salesforce Ventures is amazing. Like Salesforce Ventures has invested in some of the greatest companies out there right now. And that's the thing with Palantir too. But the fact that they went into the SPAC game, it didn't, like I said, it didn't sit well with me. And on top of that, what ended up happening was, among all the Wall Streeters, like people who actually invested, who actually like are big money managers, they looked at it and said, from an analyst standpoint, like, these SPAC things don't make sense. What is Palantir, I wouldn't say hiding, but what are they not telling us, right? And that's where a lot of them took their hands off. Now, the one thing we are seeing is a lot of them getting back in, because now from a valuation standpoint, all those SPAC losses are already in, right? So they're already in the mix. So it's not like Palantir can go further down in its SPAC losses, right? At this point,
they haven't sold all their shares. They still have 126 million they have to sell.
Yeah, but most of those they're going to end up getting the cash flows back by the end of
I get yeah.
yeah.
There will be
But
some way. Like that's my thing is like only one needs to work. Like let's just say I think everyone's in agreement. Ouija's one of the most interesting ones, right? So if Ouija takes off and that becomes a real, even just say a $10 billion market cap company down the road, the investment paid off. It wipes all those other losses away. Now we have to sit there and watch it develop. That's not going to happen right away. And I think that kind of ties us all back to the theme of, people like saying that we're just all bag holders. It's not, but we got a long haul to go.
Yeah, but now, Dom, the risk is all gone. You see what I mean? Like the risk of the SPACs putting a dent in Palantir, that's gone now. Yeah. Right?
Yeah. So now we're not going to be getting involved in any more of that. Yeah.
Right. And also they've already taken the most of the hits on it. So now all the stuff that happens to Palantir, all that risk is done. If you're telling me Palantir now, to me right now is a better time to buy Palantir than ever before, because now majority of that operations risk that it took on with some of the SPAC stuff, that's gone. This Ukraine thing, that has been like the best thing to happen to Palantir. I'm not going to say, it's a good thing for humanity. I feel for Ukrainians, but in terms of, hey, if your one side of your business is all about providing intelligence so you can make better operational decisions, a war in Ukraine versus someone like the Russians is probably the best area where you're going to be able to make a ton of money. You're going to be able to show off your product, which is Gotham, to a ton of countries, not just the Ukrainians, but the Polish, to the Lithuanians, to the French, to the Germans. All this stuff that they've been saying that, hey, you're going to need us 5 years from now, guess what? That got compressed into the present because of this Russia thing. So right now we're seeing that slowdown in what is that thing called, government revenue. But I think over the next 2-3 years, it's going to explode, because all these European countries, they're going to say, look, whatever the Ukrainians did to win, we need to get some of that. And I have a feeling a lot of that has to do with Palantir and providing that data intelligence framework, especially from satellites and AI to figure out where the Russians are, where the tanks are. Integrating that into like battlefield decisions is probably helping the Ukrainians stay afloat right now. Because
Did you guys see Tom's video on the 504 million that is going to be disposed of this year of RPO revenue? So they have 1.2 billion of RPO revenue that is not been accounted for yet as far as recognized revenue. And they plan on recognizing 42% of that as invoice revenue this year in the next 12 months. So that's where in the video I made earlier, I don't see how they don't make $2 billion or beat $2 billion in revenue when they already did 446 this past quarter for Q1. Add the 542 or 504 in there. And I mean, if they even just keep even keel with what they're at, they'll beat that.
For the SPAC revenue, they did say they're going to get 30 million per quarter from the SPACs, right? So, that means that's revenue coming from the SPACs, irregardless of them selling their equity positions in them, right? Mm-hmm. That's just money that SPACs are paying them for Foundry. So even if they take the L on the equity position, at least they're getting the revenue. Okay, so now it's just a question of if
Ryan asked, is the funds committed for? Yes, those 1.2 billions committed for. So that they're going to choose to recognize half of that revenue in the next 12 months.
Yeah. So as long as the L they take on the actual equity value of their SPACs matches or hopefully doesn't beat the revenue they're getting from the SPACs, then it would be a wash. I guess we'll see how this spot. Yeah, Black Sky, I know you're seeing in the chat. I think that one's a good one. It's just a question of like, are they the winners? I mean, I was bullish on the SPACs because when I see Karp talk about it, and again, I think this goes to Kris' points about you get philosophically enthralled in what he says. He like had this whole narrative for 5 minutes about why you have to do stuff small, you have to prove yourself to the industry. And the girl that asked him the question, she was a Palantir employee, and he was like walking her through this. And that kind of got me understanding, okay, this is what they're doing with the SPACs. In reality, they might have just been buying revenue because they needed something in 2020 when they were DPLing. So, okay, we'll see how that happens.
Good chat stuff. If you want to call out some of your other viewers, just they've had some good questions and comments.
Palantir low will be 5 USD, which would you see? Yeah, at $5, people are going to sell a lot. What else do we have in the comments? Let's do. Sean did a great video today about the sales cycle. I recommend everyone watching this. He's deep into data analytics and sales, so his argument is that this might happen a lot more sooner if they can start getting into some certain doors. Insane dilution while investing in SPACs was recklessness. If they had the money to invest, why did they issue shares to employees instead of cash? Unacceptable behavior by Palantir. What's the response to this?
So I think that right there is the SBC was actually a great thing. All right. And let me explain. Right now, all those employees in the last 2 years that got RSUs at $26, $27, guess what? Palantir recognized that as a cost, but it only paid half technically in terms of equity right now, right?
They're going to have to stay if they want to catch that money.
Exactly, right? All the new
Can you explain RSU exactly? What does that mean?
So basically, it's like, okay, Amit, you're going to get $50,000 for signing up to work for me. And you're going to get 50,000 every year. So you're going to get 50,000 in, let's say, 2022, 23, 24, 25. But guess what? You don't get all that money up front. It vests over time. So you have to stay.
4 years.
Yep. And typically 4 years. So you have to stay all 4 years in order to get any of that money. If you leave, that money does not come to you. That money stays with me, right? So that's number one. Number two, they assign those shares to you based on the average of that quarter or that whatever the term of that contract is. So if I'm supposed to distribute 50,000 to you for the year and the stock is trading at 50, right? You're only going to get 1,000 shares, right? If the stock is trading at $5, you're only going to get you're going to get 10,000 shares, right? So you can see how if you got 1,000 shares last year because Palantir was worth, let's say, $25,000, right? And you got 2,000 shares. Right now, what are those 2,000 shares worth in just for you? And not to mention, you had to pay tax on what it was worth when it was still trading at 25. Right? So that's where Palantir says, okay, the SBC will motivate employees to stay with us and stay with us for a longer period of time, right? Because now they're being personally committed to us. A lot of the employees at Palantir, their total comp looks really high. They're like 300,000 plus, right? Some of them, even for a forward deployed engineer, it's like 250,000. But that's mainly because majority of the money that they're getting is in equity. They're getting maybe 80 to 120,000 in actual pay, in cash pay. So all the expenses that you're seeing from Palantir, majority of them are non-cash expenses, which are getting lopped into the SBC. But the one benefit is if the stock price goes down, that SBC actually saved you money because you weren't burning cash. If I pay you, Amit, $200,000, that's just $200,000 that's gone. But if I said I was going to give you $200,000 in shares, right, and those shares drop off.
But what about the dilution? Like, how does that reconcile with the fact that the SBC is a good thing?
So imagine being allocated at $25, right? You're only going to get 1,000 shares. If I paid you in cash instead of shares, guess what? That money just would have went through the door, right? So that's the key right there that you have to remember.
And they are reducing their SBC. They reduced it by 25%, I believe, this go round. So they are reducing that. That was something I was heavily looking at to see if they keep. They did that for like the last 3 quarters. Of reducing the RSU or the stock-based compensation. And then to Kris's point, it definitely incentivizes you to stay because you're not going to sell out or sell those shares for half what they're worth. And the other piece is the CEO of Upstart made a good comment on his interview he had with Bill Brewer. He said, we really were wondering if we wanted to do stock-based compensation or not, or pay out big salaries. And he said, the risk of getting the wrong people hired into your organization by paying out big salaries and not stock-based compensation is very likely. So by doing stock-based compensation, you have a better chance of hiring people that are in it for the long haul for the vision.
Yeah, and they can pip you out. that's the other thing too. Like, it's a term in tech. Performance improvement plan. They could put you in a performance improvement plan. You don't live up to the expectations. Boom, you're out of here. You know.
Yeah.
Well, the risk is if now the stock price stays low for a long time, because that creates a vicious cycle where the company needs to pay a lot, maybe providing more cash, alternatively issuing a lot of shares. So let's say Palantir stays there for many years at this range. That would have that would act as a headwind for investors, not only because the stock is down, but also because to keep those and the new employees and the renewal of the previous RSU plans, they need to issue more shares to provide the same dollar amount package. So,
but Arny, they could pay cash. They could pay more in cash now, you know, as opposed to paying in equity, which is already so low. They could just say, you know what, in terms of compensation, we'll give you more cash. But I will say this, everyone that I've spoken to, that like they're like super jealous of anyone starting this year at Palantir, because they're going to get a ton of RSUs at a really cheap price, you know.